What is it that they like from Tata Power? What is it that they're expecting the company to deliver? EBITDA CAGR of 16% over FY24 to FY27, expecting the company to double its RE capacity to 10 gigawatt, and EPC business growth they are seeing quite robust from the current 15,700 crore order book that they enjoy. Now coming to JSW Energy, here too they've gone ahead and initiated coverage. They have a buy rating, target price is close to 885 rupees a share. The valuation is at 15 times December 26 EV to EBITDA. They're expecting 38% EBITDA CAGR over FY24 to FY27, expecting a doubling of the RE generation capacity by FY27, and also likely to go ahead and achieve its 20 gigawatt RE capacity target ahead of schedule. So positive on Tata Power as well as JSW Energy.
All right. So that's essentially some of the stocks. Vivek, thanks very much for that. We've got the market open coming up on our screens. It's 25 points higher. It's slow, steady. It's calm. And it's not very excitable, which is good news. So slow and steady does it. Let's see. 24,828, 24,830 is where we are at. And the Sensex is starting about 0.25% higher, 81,200 or so. Nifty Bank is up 0.4%, 50,662. Mid-cap index is starting about 1/3% lower for now. And that's something to watch out for, because broader markets, large caps, maybe, we see a bit of a reversal earlier. We don't know if that will be today, but I think that'll be first off the block. Broader markets, not so sure. 0.5% down on the mid-cap index. Now watch that closely. We got the heat map, Nifty heat map up on your screen. I think you got about 25 down and about 22, 23 which are higher. So it's kind of evenly split. 16 lower now on the Nifty, bit of a swing on the other side, but still flattish. Surabhi.
Okay, so we've got some red on the screen. Now the Nifty is down about 20 points. Let's see what the drags are. Tata Steel, Hindalco, the metal names basically, which have had a good run along with China. There's Tata Motors that's reacting quite poorly to those JLR numbers. Power Grid is lower. BPCL is down. Actually, BPCL brings me to other oil marketing companies as well. That would be on expected lines. HPCL, BPCL, IOC, all of them dealing with cuts of about 1%, so it's not too bad. Anyway, then there's some profit taking on IT, HCL Tech, TCS, Tech Mahindra. These are names on the way down. However, what is working for the bulls? Lever, 1.5% up. M&M. One of the picks that Amnish just described at PL. There's Ultratech Cement, Cipla. These are some gains. And the Bank Nifty. Let's see if the Bank Nifty can make a more decisive move. SBI, Axis Bank, ICICI Bank. There's some green here, but it's really flip-flopping at this point in time. By the way, watch out for Trent. Trent is up 0.5%. They keep disrupting the market. And Mangalam was pointing out that they're now getting into lab-grown diamonds and trying to come out with very, very disruptive pricing as well. So let's see. That's an interesting stock in the news today. But absolutely at the flat line. Big battle between the bulls and the bears going on right now.
Well, that's right, Surabhi. A few stocks that are moving and, falling on high volumes. You have MTNL, that one's reeling under pressure. SBI has declared MTNL non-performing asset. So that one on very, very high volumes, that's lower. Suzlon is now down closer to around 5%. So that's a big downtake, actually, that we're seeing on Suzlon. So keep an eye out on that one as well, now down 4%. Jyoti Structures, volumes higher out there. Late last afternoon, Ashish Kosholia's name had appeared in the past quarter disclosure, so that could be one of the reasons. From the F&O frontline names, well, a few stocks that deserve special mention. The metal stocks, they're getting clobbered. Is China's recovery not as much as what the street was working with? Well, that could be a factor at play. NMDC and Nalco, both of them down 5 to around 6%. JSPL as well down closer to 2.5%, and Vedanta down 2.5%. Keep in mind, the index has rallied close to 10%. So that's coming for some profit taking. Later on in the show, we'll have a conversation going with Nalco. Two more stocks. HEG, they have gone ahead and they have picked up 8% stake in a larger competitor globally. For the time being, the stock had opened up in the green with a gain of around 2%. And High-Tech Pipes, they have launched that QIP. 600 crores is what they're looking to raise. We'll get both these managements for you here on CNBC-TV18 in the next 90 minutes or so. So keep an eye out on both those two counters. Prashant.
Well, it's quiet, and quiet is good. So, approaching markets with some trepidation and some nervousness. So let's see if we are able to hold, or there is another wave of selling which comes. But a lot has happened last 5 days, very, very quickly. I mean, the classic sort of, saying, right? Markets go up, taking the stairs, come down the escalator. And that's essentially what's happened very fast, and lots of FII selling. Now, just a quick broader market check, right? 2:1 declines to advances. So broader markets are still reeling under some amount of selling pressure. And maybe we can put out a few names. Sobha is down 3% on volumes. Vietech Vabag is down about 4% on decent sized volumes. NBCC is at about 110 or odd, 3.5% lower. I won't repeat the metal names which Nigel put out, but they are some of the big losers. Suzlon is down about 3.5%. It's by far the biggest volume-led cut. Stocks at about 68, 69 on Suzlon. So there is some amount of pressure coming through. And Shakti Pumps, I mean, there was a bonus which came through. Stock went up 10% in 2 days, but is back at about 4,200. In any case, I mean, it's one of the best performing stocks in a long time. On the upside, the biggest volume-led gainer, number one, is BSE. Bombay Stock Exchange is up 3.5% on a very large volume. So what's this one? 39.70 or so on BSE. And, you know, it's largely basically around the levels before the SEBI FNO restrictions came through, and you know the announcement that each exchange can only have one contract on which it can offer weekly options expiry. So it's corrected a little bit. The high in the recent move was closer to about 4,300. Stocks at about 39.50 now. Paytm is reversing a little bit. It's up 3%. Decent sized moves. So these are stocks where there has been interest and they got sold with the market. Paytm 673 or so. Mahindra & Mahindra, I think we had a technical call from one of our analysts, 1% higher. It's got decent sized volumes. Amber is up 2%. PG Electroplast, you know, big climb down recently. High was about 694. And of course, yesterday it fell to about 530. It's coming back to about 560 now. That's a 4% pop. So you'll see lots of this, you know, stocks which have been sold, clawing back a little bit here and there. So that's the overall market picture.
Well, I think the one positive is the Nifty Bank is showing signs that it wants to fight back. Last half hour yesterday, the index itself was moving 1,000 points. In the positive, you know, recovered 1,000 points, and then in fact it ended with a cut of around 1,000 points odd. That's showing some fight. So keep an eye out on the Nifty Bank. That needs to bounce from these levels to get a sustainable bounce. And the Nifty Financial Services Index also plays out the weekly expiry today. The other index is the Nifty IT Index. That's been holding one end up. For starters, that's opened up mildly in the red, I think. So it's down close to around 0.5% odd. And that's been the go-to segment of the market as well. So we'll have to see whether or not that can bounce. I think the ingredients are in place for a bit of a bounce today. For the time being, we're consolidating, which is not such a bad outcome after the kind of selling we've been seeing on a day-to-day basis.
I mean, you know, banks can bounce or Reliance can bounce. Reliance is the other one,
Yes,
which has fallen quite a bit. I mean, that single-handedly could sort of do it for the market as well, at least at the margin. It's already starting to recover, RIL. I mean, I think yesterday's low on Reliance was about 27.20. And of course, it's fallen from about 3,200 kind of levels. Today's low is 27.30. It's recovered about 10 bucks, 10-15 rupees from the day's lowest point. So this is the other one. Well, let's welcome in Sandeep Bhatia. He's our market master of the day, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, good to have you with us here. Thank you for your time. A lot of FI selling last 5-6 days. Sandeep, let's just get a quick sense from you on that. Do you think most of it is done? And presumably this is all, as we've heard from many others we've spoken with, to fund what's been going on in China, which was like a lot of shock and FOMO, you know, in a positive way. But do you think a lot of it is done?
So I think Indian market will definitely face continued headwinds at least till end of this month and possibly in November too. I think there's definitely a good bit of valuation correction that the market needs from here on. So yeah, I think China is just one reason why India will see some outflows from FIIs. But you know, the underlying reason is the fact that valuations had got to levels where definitely they cannot be justified, especially in the small and medium cap space. So this correction is actually, I think, healthy and welcome.
Sandeep, just give us a color on what kind of this selling that we've seen from FIs. Is it a lot of long only? Is it fast money, hedge funds? I mean, just give us a sense.
Both are selling. Hedge funds are also selling, and so is long only.
But
at the levels
is it predominantly one or the other?
Well, it depends on a single day that you are looking at. I think initially the hedge funds are the first to move, but the long onlys follow. That's how the way it is. So I don't think we should at this stage and at these levels in the market, FIIs will sell across the board. It's too premature to say that one will sell more than the others. It's just a short-term thing that you may see someone selling more than the others. But yeah, there is definitely a good money made in India, and there's profit booking, plus there's overvaluation, so corrections need to happen. All that is happening. In fact, the spate of IPOs and the spate of promoter sellings, which we are seeing, was clearly indicating that the market was overvalued. If the person who's running the business and owning the business thinks that it's overvalued, then definitely it's overvalued.
Just to finish the point, Sandeep. So the indication you're getting, and you'd be dealing with most FIIs, is that they're more inclined to sell more at the margin, incrementally.
At the margin, there definitely would be sellers, and they need to fund the IPO pipeline. That even if they are not taking money out, they would still need to fund the IPO pipeline, which India is offering them. So I'm not saying that people have lost interest in India or the IPOs are not going to get subscribed. I think all that will also happen. But it's not that more money can continue to pour into India regardless of anything else, regardless of China's performance, regardless of valuations in India. No, that is not the case. So I think there is definitely a rebalancing and cash flow management that's happening.
Sandeep, great to have you on. Really interesting times, right? In the last couple of weeks, and they say in the market, the only risk is the one that you haven't factored in, or the one that is unknown. And that's exactly what played out, because no one was anticipating this level of FBI selling and what that could do to the market. So, okay, let's talk about, the issues at play here. FPIs did not sell when capital gains tax was hiked. They did not sell when there was volatility on the election front. But they chose to sell. The trigger was this big move in China. Now, if the China rebound doesn't play out, and if it ends up being another bear market rally, I know that's a big if right now that we're working with, given the morning announcements as well, then what happens? Then does it go back to BAU for India? So in theory, then does it remain a buy on dips market, which is what we've seen since COVID?
So I think good question. So let me just give you a bit of a context. When you had MSCI India weight in the MSCI, which is the index which most FIIs would look at, equal to or even slightly moderately higher than China, that was clearly a big trigger. There's no way the Indian GDP or the Indian economy is as large or as diverse as the Chinese GDP, as China's economy. So clearly the market was quite richly valued. On the other hand, China has been extremely, in the doghouse, and it's been coming off for a couple of years now. So is this a trading rally for China, or is this something which can have longer legs? Macquarie view is that China will not be a structural growth driver for the global economy that it has been for the last 20 years. But definitely there is a case for a trading rally, and that trading rally can last for a couple of months, right? It can last, after the presidential elections, it can last up to the beginning of next year. So I think October, November, December would be a good time for a trading rally in China. And therefore, to some extent, there will be profit booking and money, getting off the table in India as far as FIIs are concerned. But if the China rally fades, which I think most likely it would, because the geopolitics between the US-China is still very negative. Whoever wins the presidential election in the US, definitely there will be trade barriers and tariff barriers erected. And I don't think even Europe or India are necessarily welcoming Chinese imports. So all said and done, this rally in China would definitely fade in the next year. In that event, India has much longer legs. Macquarie believes that India will continue to do well, and in fact, Macquarie believes that US, Japan, and India are the three big structural markets of the world. So that's where we will be, but that may take some more time.
Just to clarify, you're saying the trading rally in China that could continue till the end of the year, right? Till about November, December.
Yeah, yes. Once the new administration is in place, once their policies
In
are
the
unveiled,
US. Yeah.
yeah,
Got it.
once
Got
the
it.
policy and tariff barriers are unveiled, then the issues on China's growth will come to the forefront, which are not right now. And anyway, a lot of this money is coming from within China. This trading rally is also fueled by retail Chinese investors. So if we have retail Indian investors, we have to remember that there's similar or bigger Chinese retail markets. So all of them which have been inactive, I'm told, there are various photographs going around that during the Golden Week, during the holiday period that just ended in China, everyone was reopening their brokerage accounts in China. So clearly that's what's happening.
All right. Hi, Sandeep. Just coming back to you, but I just want to focus on one stock. DLF, that stock has spiked to the high point of the day. I think the street is taking note of the outcome of the Haryana elections. And sometimes, in fact, you do see that, sometimes it's trying to extrapolate that maybe, in fact, the government that comes in could be more favorable for this. That's at least the thought process. So explains why that stock is up close to around 1%. Though that's market's way of seeing things. Sandeep, I wanted to ask you about the state elections. The markets took the general elections in its stride. We got a coalition government with Prime Minister Narendra Modi at the head. So they digested that. They said policy continuity will continue. Now the problem is various states, appear to be going against the ruling NDA. Whether it's Haryana, whether it's, the street is bracing for Maharashtra election outcome as well. How important are the state elections from a market perspective?
State elections are important. They give an indication of where the political mood is going, and therefore I think definitely the state elections in Maharashtra, which the dates have still to be announced. Then there is then there is of course the Bombay Municipal Corporation state elections, which will happen, and then there would be next year the Delhi state elections. So we have a slew of elections. As I always tell investors, India is always in the election mode. So if you think that the general elections are over, then that doesn't mean anything. We'll have the state elections come through, which are quite important. So to answer your question, yes, state elections are important, but more from what it gives a political message to the ruling party. I think the political message which the ruling party got was that the prosperity that has come through should be more widespread, and therefore I think we see the announcement of more fiscal spending and consumption stimulus, which is happening. I think these state elections will reinforce that message for the BJP, and to that extent, I would definitely think that we will see more competitive welfareism come into play for the next budget.
All right, Mr. Bhatia, thanks a lot for joining in and giving us your take on the markets and how you see things shape up as well. For the time being, the markets have seen a bit of a recovery. The Nifty up close to around 40 points, 30, 40 points, but it's very, very swift out there. We're back down to around a 20-point gain. Let's focus on Nalco. Today, the stock is under pressure, but otherwise, the Chinese stimulus announcements, well, it got the metal stocks very, very excited. In fact, Kotak is bullish on Nalco, given its attractive risk-reward as well as the valuations. To help us out with how business is shaping up on ground, we're joined by Mr. Sridhar Patra, the Chairman and Managing Director of Nalco. Hi, Mr. Patra. Good morning and good to see you in. Thanks a lot for speaking to us here on CNBC-TV18. Aluminium prices have seen a good bounce. They're holding around that $2,600 a ton. Could you tell us what kind of a price band we should work with for aluminium prices from here on? And also alumina, normally the derivation is as a percentage of aluminium prices. And last recorded, I think it was around 19-20%, which is higher than averages. What's the latest price that you have on your alumina sales?
Good morning.
Morning.
Let me tell alumina and aluminium. The pricing is basically based on a different mechanism. If you see the alumina price at present, the last spot what we have made, we have reached beyond 600. The basic reason is alumina price is depending upon the supply and demand forces. And Alcoa plant had production stoppage 2.2 million tons. And Rio Tinto Alcan also made production curtailment for making some changes in their plant. Hurricane Beryl also affected. So these are the temporary impact, but I feel this increasing price trend. Now at present it is around 23%, 22-23% of the aluminum price which is coming. It will continue. I foresee that this price trend will continue so far alumina is concerned during this 2024. And the metal price, if you will see, 2611, it was the highest in this financial year, which is on 30th September 2024. But this price, as per the market analysis, is highly expensive and it will come down. And that has happened. On an average, if you see 2024 aluminum price, it is 2451 till 30th September.
Okay.
And the market analysis anticipate between 2300 to 2400, it will safely move within this range. And I believe it will move in this range. And at present, the alumina price, if you consider 2400 on an average as the aluminum price, comes around 21-22%. And this trend, I foresee it will continue for 2024.
Interesting, Mr. Patra. So you're expecting that aluminium prices will hover around $2,300 to $2,400 a ton, while alumina could hover in this vicinity of around 550. Should that be a ballpark number, $550 to $600 per ton?
Alumina price last spot tender we made, it is above 600.
Correct.
And I am expecting that this price will remain because the temporary factors
Got it.
like Alcoa plant interruption, Rio Tinto curtailment of production, Hurricane Beryl, because these are affect the market for temporary period. So to make correction, also I again say that it will take 4 to 5 months. So I believe strongly during 2024, my alumina realization will be good and it will be in this range only.
Now, just reconfirming that $600, sir, because if it's aluminum price is going to be $2,400 on an average, then 600 would be close to 25%, alumina as a percentage. But as you said, because there's a deficit situation, that's why you're expecting alumina prices to stay elevated for the next 5 months or so. Could you give us that number, the alumina deficit in the near term? Kotak is believing that it's around 500,000. Would that be a fair estimate?
Alumina deficiency is expected by 1 million ton.
1 million.
And metal surplus is expected by 0.5 million ton. As such, around 1.92 million ton of alumina is required for 1 ton of metal. So this deficiency of alumina and the surplus expected of aluminium will get compensated. And next year we will be getting a better picture. So there is no surplus of metal, no surplus of alumina.
Okay, so right now we have less of the metal going around than needed and less of alumina than needed. And there is this deficit situation, a slight gap that we're dealing with. But sir, that would perhaps put you in a sweet spot, right? Because you're also ramping up your alumina capacity. So given what you just described on price trends, both for aluminum and alumina and your Capex, what should we work with in terms of FY25? How much of this capacity comes on stream this year? What about next year? And just give us some projections for the current year, given the market conditions that you described.
You see, the smelter capacity expansion cannot be made just by 1 lakh or 50,000 or 1 lakh, 2 lakh tons. Minimum capacity for smelter expansion, it is 0.5 million, otherwise it will not be economically feasible. So it is never expected that smelter capacity from 0.46 million ton to it will go 0.56. 0.462 we are planning to go by another 0.5 million, so it will be around 1 million ton. And refinery expansion, the fifth stream refinery expansion by 1 million ton, which is expected to be commissioned by September 2025. And if it is commissioned by September 2025, almost half of the 25-26 financial year will be getting additional aluminum. So I feel 0.5 million ton extra production of alumina you can envisage in 25-26. At present, we are doing around 2.1 million. So by 25-26, it will be around 2.6 and thereafter it will be 3.1. And metal production, we are ramping up. our capacity was installed capacity 4,60,000 tons. Now this year we have taken permission from the State Pollution Control Board to increase the production with the same pollution load. So we'll go up to 4,80,000.
Sir, so can you just tell us what is the capex with this kind of ramp up that you described over, FY25 and over 26? What is the amount of money that you're spending? What is the total capex, and how much is allocated for this year, 25, and how much in the next year, 26?
You see, for this current year, we have kept 2,000 crores capex, and that includes both the expansion of fifth stream refinery as well as modification and replacement of the existing asset of the existing operational plant. And next year also, we are expecting the capex of similar volume of 2,000 to 2,500 crores.
Sir, since you're describing the expansion that you're undergoing, and we've already discussed what the market pricing conditions are and how you're expecting alumina to sustain around $600 given the tightness. I'm just reading out some projections that Nigel shared. I mean, this is one of the brokerages on the street. Kotak is saying your EBITDA should rise by 8% in FY25, by 11% next year, and by 17% in FY27 as a lot of this capacity comes on stream. Are these fair assumptions to have, expectations on the EBITDA increase? 8% this year and 11% next year?
I am always optimistic that we are the lowest cost producer of alumina and bauxite. So if the same cost remains, then definitely we will perform better than the market expectation. And again, I am telling our caustic soda plant with GSL, that also started operating at 90% capacity this year. It is likely to operate at 100%. So once it is operating at 100%, that profit margin also will come to us. Whatever caustic soda we are procuring from them, being a JV partner, that profit margin also will come apart from raw material security. So I am quite optimistic that we'll be performing better than the market expectation.
Okay, got it. Just a quick word, since you have 2,500 crores of Capex lined up, you're sitting on a good amount of cash. So all this Capex will be via cash as well as the operating cash flows that you generate? No debt is what you'll take on?
You see, the Capex target, what we are keeping, so far resources concerned, we don't have any constraint. Because it is a zero debt company, we are expecting based on the cash outgo. If the fifth stream refinery is commissioned, basically 20% retention money, all this money which will be paid after the plant is commissioned and the trial run is made successful. So I am quite hopeful this is just a expectation that this will be around this. Even if it increases, we don't have any resource constraint, we can go ahead.
Just to confirm, you will continue to remain a net cash company despite this big Capex plan, right?
Yeah.
Got it. Let's talk about yours focusing on the cost side. And the street is quite excited because one coal mine started ramping up and giving you coal. Now the other coal mine as well is ramping up. So I think your total requirement is around 6.5 to 7 million tons. How much of that requirement will come in for captive sources? And what could the savings be in FY25 and then in FY26?
If you see the coal, Utkal D has been made operational. And last year we achieved 2 million ton. Current year by September, 2 million ton we have achieved. And the consolidation of Utkal D and E is under process. I am quite hopeful that within a month or two, we'll get all the statutory formalities completed. So we will go beyond 2 million ton this year coal, and next year I'm confident we'll go beyond 4 million ton. And
Okay, so
at present, the company is getting a benefit of around 350 to 400 crores due to operationalization of our own coal block. And another aspect I will tell, whatever the cost difference we think between my e-auction coal and the cost of production, that I am showing as a gain. But the indirect benefit what I get, I am assured not to purchase any power. The power what we purchase during the rainy season, etc., it is an excessive price.
okay.
So that also will give a savings. will not purchase power, and coal security, non-purchase of power, and which will ultimately reduce the average cost of coal. So in that way, I will be much beneficial once it is made 4 million tons, and there is a provision that up to 40% we can go up, ramp up our production. So once we achieve 4 million ton also, we can ramp up to 5.6. So the profit will be multiplied and the company will not look back.
And this number of 350 to 400 crores is based on getting 4 million tons, right? This savings of 354.
400 crores we are getting at present from 2 million ton.
From 2 million tons. Okay, so when you go to 4 million tons, it will be close to around 800 crores.
Exactly may not be 800 crores, but it will be beyond
Got it.
600 to 700 crores.
Got it. All right. Thanks a lot, Mr. Patra, for joining in, giving us your take on business. You seem to be confident. We look at the delivery from here on. But clearly, pricing in your favor, costing as well is something that you're focused on. But by the way, the bottom of your screen, that's the big headline. BJP has taken a lead. It's ahead in Haryana.
This is as dramatic as it gets. I mean, the exit polls were indicating 60. I mean, actually, some were saying on the higher end, 60 seats to the Congress. And the difference actually now, some of the some channels are actually putting BJP ahead in terms of the counting, which is still going on. It's still early. These are still leads which are coming through. But this is a nail biter if there was ever one, right? I mean, actually, when we started, it was, we put that flash out saying that Congress has passed the halfway mark in terms of leads. That was 30 minutes back. And now, as you and I think in the next 30, 40 minutes, it should be clear. But if these are the results which hold, I mean, I think this is a dramatic improvement from, of course, the pre-exit poll from before when the voting, because Congress was expected to do, a lot better, especially after the general election results. Haryana anyway was looking like a little bit where the BJP was on the back foot. But now look at this. BJP is now ahead and the Congress is behind as those leads continue to come in. So I think, dramatic turn of events. Let's just look at the market as well, which I think is responding. The market is up 40 points now on the Nifty. So 24,840. I mean, never a dull moment.
Yeah.
There is, of course, all that with China. Who was even thinking about Haryana with the exit polls and what they were giving the ruling party? Most had kind of written off and they were looking ahead to Maharashtra, which of course is the big state. But this certainly does throw up a big surprise. And I think the market is reacting to whatever is happening, I mean, in China, etc. But I think it's now starting to take note what's happening in Haryana as well. So 24,850, we're up about 55, 60 points. This is a bounce which is starting to develop in the real sense. I think Bank Nifty continues to hold with about 0.8, 0.9% gains. But there are other non-banks which are starting to fire as well. Reliance, for one, from the lows has picked up about 25 rupees. So that's about 0.5%. That's a heavyweight. And, we'll see if there is more steam which starts to coming through. We'll take a quick commercial break here. We've got, by the way, a political discussion lined up a little later. But before we do that, we'll have the eye on earnings, right? IT services first off the block. So QSQT, quarter se quarter tak. Remap sets up the context for us. And we'll have Kavaljit Saluja of Kotak talking to us about what to expect from the IT services pack. Stay with us.
Welcome back. You're with us on Corporate Trader. It's all happening here. The market's bouncing back, reacting to those result leads that we're getting in from Haryana. With now this going down to the wire, a close neck-to-neck competition between the Congress and the BJP. By the way, just before we start our discussion on IT, look at the move on some of the other stocks beyond banks. Look at Ultratech Cement. Look at something like Adani Ports. Sharp moves. L&T. Quite a few names, aside of course, all the banking names that are leading the market up move right now. 70-point move on the Nifty. So plenty to contend with China elections and the fact that we're getting into results season very, very soon. So it's time to kick off our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Rima is joining in to put the spotlight on how the second quarter would have perhaps panned out for IT companies. Let's get the curtain raiser going. Over to you, Rima.
Thanks so much for that. So let me start with how the quarter was for the IT stocks and the way the Nifty IT index has outperformed. The Nifty IT index is up 16% in the July to September quarter, and from the beginning of June, it's up close to about 30%, significantly outperforming the benchmark indices. The outperformance was driven by investors increasing their positioning in the sector after 2 years of earnings downgrade cycle on the hope that the IT sector has bottomed out and is on the cusp of a recovery. Now, IT stocks are trading at a premium to their last 5 years average. But then remember, so are most of the sectors in the market. Now, moving on, the question in this quarter's earnings season is, will the numbers match up to the narrative that, in Q2, things are going to be stable, and going forward, the earnings growth is going to recover, particularly in FY26. Now, this quarter, we're expecting Q2 earnings to be similar to Q1 or maybe slightly better, with the financial services vertical, but more so in North America, recovering. Infy is likely to lead with about a 3% revenue growth on a quarter-on-quarter basis. Margins across the board are likely to be stable. One, there is INR depreciation, so that will provide the boost. And also, there is no big impact of wage hike. For TCS, it took place in Q1, but for most of the others, like LTI, Mindtree, Infosys, HCL Tech Mahindra, the wage hike kicks in only in the subsequent quarter. Managements are likely to continue to sound cautious around discretionary spend. So the key to watch will be, will Infosys go ahead and up the FY25 guidance, which stands at 1 to 3%? Now, there is scope, considering that in Q1, Infy's revenue growth was 3.6%, and in the current quarter, we're expecting a growth of about 3%. Many brokerages believe that Infy is likely to go ahead and up the guidance. So whether it's Kotak, Citi, Morgan Stanley, they're all baking in a guidance increase, and this is what the numbers look like. HCL Tech, though, on the other hand, is likely to keep their guidance unchanged, so 3 to 5% on revenues, margins at 18 to 19%, and Wipro, which gives you a quarterly guidance, for Q3, it's likely to be between minus 0.5% to 1.5%. So to round this up, Q2 is likely to be stable, but the question is, will growth accelerate in the second half of the year? Are we poised for a strong FY26? Do margins expand in FY26 as consensus believes? Will 2025 budgets show an uptick in spending, given that interest rates in the US have, we've already started seeing the rate cutting cycle there? Are hiring trends improving? Will earnings recover in the next 12 months? Well, that's the expectation. And the question this time is, will the numbers and narrative meet that? Back to you.
All right, Rima, thank you very much. Indeed, that's the question. Will the commentary and real hard numbers meet the surge that we've already seen in stock prices? To talk about this, we have Kanwaljit Saluja, ED and Head of Research at Kotak Institutional Equities, joining in. Actually, Kanwaljit and his team are in the camp that is, in fact, expecting Infosys to go ahead and hike the full year guidance. Kanwaljit, great to have you on the call this morning. Thanks for joining in. So tell us, I was looking at the Infosys stock price just now, but while the expectation is on the guidance increase, look at the rally. It's tremendous. The stock is up 40%, near 40% from the June lows. So you're also sort of walking in with very tall expectations. The company has to deliver, right? Do you think they can?
Yeah, we do actually believe that the numbers would be consistent with where the street expectations are. We do expect increase in their revenue growth guidance to 4 to 5% from 3 to 4% right now, or as of now. Of course, the stock has rallied, but the way to look at it, the stock was terribly undervalued 3 months back. Now it's getting more in sync with the true potential of the business here. So yeah, we expect the numbers to meet the expectations which the street has.
No, absolutely. I take your point. And the stocks, I mean, IT sector, Infosys included, they've all been rallying for all other tactical reasons as well, the shift in money, etc. But let's talk about the demand recovery. And I think you're expecting a bit of improvement on margins as well. Is this going to be the real deal, like a durable pickup in spending in key markets like the US? And then what would be a sustained rate of growth that you will pencil in? I think that's a bigger question that people are asking. How much will the street be willing to pay for, let's say, 7-8% growth? Is that the best case scenario on a durable basis?
Okay. The first question you asked is on demand recovery. I mean, look, right now, the current situation of demand is quite mixed. There is improvement in demand in US financial services, but not so much in Europe. At the same time, there is deterioration in retail vertical. There is deterioration in manufacturing. So the net result would vary across companies, and that's where you'll get divergent growth rates. The critical question is that what happens to calendar year 25 budgets? For now, we are building in an improvement in demand in which we are building in a 7 to 8% growth rate for large companies. For certain mid-tier companies, we are expecting low to mid-teens revenue growth rate. The question is that do we have the visibility right now for those numbers? The answer is no. I think that visibility would build as the budgeting exercise gets completed at the beginning of calendar year 25, or rather actually towards the end of this calendar year. I mean, that's where you'll get the visibility for acceleration in demand. But the setup is something which is a little bit encouraging, and that forms the basis of our assumption for FY 2026 as such.
Dalaljeet, hi, good morning, and good to see you back on the program. It's been a while. Just a quick word on whether these rallies will be transitory or they're going to be durable. I mean, stock rallies across the board. Because, when we speak with IT companies, the biggest talking point has been US and AI. But again, there's no clear sense of where, right? Everybody for the last 2 years has been waiting for a US recession. Now, the last jobs data shows that labor market is still strong, and they've cut by 50 basis points. So it's like, you're hanging there without really knowing which way. I suspect that commentary will not be very much changed this time. Just your thoughts.
No, of course, commentary will not change. You'll get the normal platitudes and normal commentary, which is that there are some green shoots. The US election uncertainty is going to end. There might be something which might be mentioned on interest rates. But I don't think anyone will comment on calendar year 25. And then you'll have to contend with the furloughs of the December quarter as such. So coming to your original question of can the rally sustain in the stock prices? The answer is that many of the stocks are trading far, far ahead of the real fundamental underlying value, which is where, if you look at the overall IT sector, it is slim pickings here. It's not as if this sector is buzzing with many ideas. It's slim pickings, which is where we have, 3 or 4 names that we are pushing in a wide coverage of 16 names.
Yeah, I mean, as they say, right? Fish where the fish are. And as you say, not very many fish here in that sense. Kawaljeet, since we have you, when just a broader question on flows, and Kotak, of course, deals with most foreign investors. With what we've been seeing over the last couple of, last 4 or 5 days of FII selling, Kawaljeet, give us some color. What is the indication you're sort of getting from clients on the other side? FIIs, long onlys, hedge funds, is there more coming? Selling at higher levels? If there are bounces, will those be sold?
Prashant, I would have loved to give you plenty of insights on that, but the strategy part is covered by my colleague and my boss. I think definitely you should ask him this question.
No, we definitely will. But to get back to IT, like you said, right, that the stocks are already trading far ahead of fundamentals. 7 to 9% is the kind of single-digit growth we're still working with. But the market can keep doing strange things. Now, number one, if the companies don't come up with sort of very lively commentary, Is there a possibility of a near-term fall in prices? And more importantly, you said that you're only liking a handful of 4 to 5 stocks in an otherwise large universe. So talk about who the outliers could be, because the market's willing to pay top dollar for growth. So maybe not tier 1, but tier 2, tier 3. What are the businesses you think that could deliver on that expectation?
So our framework is a straightforward one. Companies that will directly benefit from at least early signs of demand recovery. The demand recovery in financial services is essentially in capital markets. It is in banks that have been pulled up by regulators, so they're spending a lot on risk and compliance, and regional banks. In addition, there are some smaller segments in financial services that are also shown promise. The companies that benefit from the current state of demand recovery right now are Infosys, it is LTIMindtree, Coforge. So these are our top 3 picks as such. So it's a very straightforward exercise, at least for us here.
And just very quickly, 30 seconds, we didn't mention TCS at all in the conversation. Why are you expecting sluggishness there?
It's a little bit of a surprise. The demand, we are expecting a 1% growth rate, which is fairly muted. Ideally, the company should have benefited a lot given their high financial services exposure. But then I guess, there might be some weakness in Europe. At least that's what our base case is, which is where, you might get numbers which are a little bit sluggish.
Okay, all right. Kawalji, thank you very much for that. So appreciate you joining in, and hope to speak with you post the earnings season. Well, the dramatic seesaw in Haryana with those with the votes being counted today. Shivani is joining in from the Congress headquarters in Delhi. Shivani, I'm assuming that the mood is completely flipped, like the results which are coming in seem to have flipped.
Well, it has, Prashant. Just 5 to 10 minutes ago, the thing that you're seeing behind me was full of people with drum rolls distributing sweets. But now the mood has suddenly, as you said, flipped because of what has happened in the counting. The early trends showed that Congress was way ahead of BJP in at least crossing the halfway mark as well. But now the BJP has flipped it. So it is a neck on neck. It's almost nail biting. But as you can see, as I told you, the mood has completely changed here at the AICC headquarters in New Delhi. 90 seats up for grabs, and right now the trends at 942 showed us that it is a close call between BJP and Congress. Of course, the rest of the parties which were in the fray are nowhere to be seen in the competition, like the JPP, JJP, INLD and the Aam Aadmi Party as well, which was supposed to be a strong contender in Haryana this time. So it is a poll between the BJP and the Congress party. The mood, as I told you, has flipped a little in Congress, in the Congress headquarters, but it is a long day to go now. It's just 10 o'clock and we are expecting some more trends to come by. If we go by the exit poll results, Congress was seen taking a lead, and if Congress comes back to power, it will be after a full decade. People are expecting that Bhupinder Singh Hooda will be the chief minister face from the Congress party, and from the BJP, of course, the incumbent chief minister Naib Singh Saini is one of the top contenders. As you can hear, the drum rolls has started again, so I'm assuming that the trends are flipping again. So clearly a lot of enthusiasm here at the Congress headquarters, and so as is the case in the BJP headquarters. We were there 5 minutes ago, and both the parties are saying that they are going to be victorious in the important Haryana elections. We'll have to wait and watch for how the day goes and how the trends keep flipping, but at the moment it's clearly nail biting, and it's between only two parties, BJP and the Congress. Back to you, Prashant.
Absolutely. I mean, the numbers are still pouring in, but you got the JNK numbers at the top of the screen, and Haryana also right there. Sanjeev Srivastava is with us, who's a political analyst. Sanjeev, good to have you with us here. I mean, this is as dramatic a turn as we've seen in some time. I mean, I think you'll have to go back all the way to that Bihar election many years ago.
Maybe. It'll be nothing short of a miracle of kinds if the BJP takes Haryana again, because it goes against the popular understanding, perception, but then these things have gone wrong many times before. Also the exit polls, but exit polls have also gone wrong many times before. But just the law of averages after 10 years of rule, Haryana is not a Gujarat. So I would be still surprised if BJP takes the state. But clearly, the very fact that they've made it such a close contest till 10 a.m., one has to give credit to BJP for really fighting it out and slugging it out there in the open. So good for them.
Because I mean, I think it was kind of the Congress was basically in all of, before even the elections they were celebrating. I mean, it was like a foregone. At least that's what you could make out, that this is in the bag. And of course, the BJP obviously has worked and put their head down and worked right on the ground. Even if whatever the results finally come through, but this is very, very close in that sense.
Full credit to BJP for that. See, everybody was expecting them to lose. The very fact that even the Prime Minister, who did 10 rallies last time around, did 4 this time, the feedback even to the BJP top leadership was that it's a tough election for them, which they might not be able to take. So there is still time before the final results pour in. But the fact that they've made it a close contest, the fact that they have pushed the Congress at this time of the day, and the ultimate final tally will also be close. Like I've been repeating, full marks to BJP for getting it so close. But I still expect Congress to win.
Yeah, this is going to go down to the wire until the last vote is counted. One of those cliffhangers. Get that point. But Mr. Srivastava, the question is that will it really move the needle and have any larger bearing? I mean, we're also looking at critical elections. Of course, J&K, we're seeing that was pretty much a clear one, that it will not be obviously going the BJP's way at all. Then you're running into Maharashtra, which is the next big state. So how should we read the Haryana result, even if, for a moment, if you assume, even if it goes the BJP way, what changes?
See, on the national politics, really, even if the BJP loses Maharashtra, nothing much changes, except for the fact that the Prime Minister becomes a little weaker, the macho image takes a bit of a setback, which it has already done post the Lok Sabha elections. But I think paradoxically, the more states a coalition government loses, the government actually becomes more strong or more stable, because then there are 2 coalition allies, Nitish and Chandrababu Naidu, and they can flex their muscle more, get better deals for themselves, and the government has little choice but to concede. So the government stability, I don't think really is a function vis-a-vis these state elections. Yes, it's bad for their overall optics and image and the strongman.
No, Mr. Srivastava. No, I was not actually talking about government stability at the center at all. I mean, my question was more about policies and any changes in mindset. But actually, we also have Ninad Seth, senior journalist, joining in. So let me put that to him as well. Mr. Seth, so that's really the question, that even whatever happens for the BJP here, I mean, let's assume both scenarios, that they somehow manage to win these 2 key states, Haryana and Maharashtra. That's a big presumption. I'm just trying to understand from a policy perspective what changes. And the converse, if they lose some of these key states, then do you expect more populism? Then do you expect a change in track at all?
I think that, first of all, it's very surprising, what is happening in Haryana. I traveled a little bit in the state. I was expecting a little bit of a sweep from the Congress. I think in policy, a lot will depend on the victories. It does strengthen the centre's hand if they win those 2 states. But, at the minute, even with the lead that we are seeing in Haryana, it is looking unlikely to me. I have a feeling that there will be policy caution. I have a feeling that there will be rethink on spending on, welfare and freebies. I personally think that the last general election set the tone for competitive freebies already. So can we then expect the continued fiscal consolidation that we have so far seen and has to be appreciated? That will probably be opening up. But on the other hand, if the 5-year term is guaranteed, which it more or less looks stable, and then perhaps, it could be business as usual, despite these 2 results, whichever way they move.
Mr. Sheth, I think in Haryana, the government it was handing out 6,000 rupees to families in terms of those handouts, right? The Congress, I remember early on was saying that we're going to increase it substantially if you vote us in. And if these results hold, I mean, then actually, isn't the implication, is the implication as you're describing that we will only see more and more freebies and handouts?
See, Haryana is a relatively prosperous state. In Haryana, the problem is not so much prosperity, but jobs. Job security and jobs in the family, because a lot of agricultural business or small business does happen there. So maybe Haryana, the freebie effect may not be as pronounced as in the rest of India, especially in Maharashtra, where there is already, if you look at the campaigning or build up to the campaign, BJP itself is leading the way in that particular direction.
Yeah, no, that 1,500 rupees per month to women, that's of course come through. Just a quick word on what does this mean. Maharashtra is the bigger state, much more closely watched. If the BJP were to sort of get Haryana, does it sort of charge up the cadre here in Maharashtra for the BJP? I mean, and does it in any significant way influence elections, your sense? Sanjeev?
If BJP takes Haryana, it will be a big surprise and a huge fillip for the government, the central leadership of the BJP, and what one is expecting that Maharashtra, they are going to lose. The Maharashtra election will become a completely open one, because people expected them to lose Haryana and they have won it. So Maharashtra becomes an open election. Conversely, the significance of Maharashtra from other aspects is that if BJP loses Maharashtra, they lose also Mumbai, Hyderabad, they don't already have, Bangalore. So 3 major cities and metropolis which are very big financial heft goes out of their domain.
Absolutely. So it's a big one in terms of just sort of signaling impact and in that sense. We'll watch this one. The last. Sorry.
The real big one would be if BJP takes Haryana.
That's what I'm saying.
Mother of all surprises.
Now, and I think, as I said, in terms of parallels, we'll have to go back to that Bihar state election, maybe for just the dramatic effect, right? But anyway, thank you very much for joining us, Sanjeev. Mr. State, great to have you with us here as well. If you can hear me, appreciate it here on CNBC-TV18. The market is holding with about a 14. It's not holding, actually. It's just about 10-15 points higher. We were up 80 points at one stage. We're going to take a quick commercial break here. It's the economy next. And we'll just come back in a bit from now. Mitesh is going to be with us with, of course, some technical trading ideas. Stay tuned. Welcome back. You got Mitesh Thakkar now joining in with some technical trading ideas. Mitesh, already the first sell-off of the day has come through from the highs. We're up 30 points. We're up about 80, 90 earlier. Your trades?
Well, I have a sell on Wipro. IT names today are showing some signs of profit booking. So Wipro is a sell with a stop at 535. Look for targets of 502. And on the support levels is UPL. So buy here with a stop at about 570 for targets of 593 and 595.
Okay, Wipro and UPL, both sells coming in from Mitesh. Thanks very much for that. It's the economy on the other side of this break. Lada gets chatting with Chetan Iyer of Morgan Stanley, and they discuss China's stimulus plan and what to expect from RBI later this week. Stay tuned.
Welcome back. A press conference this morning by Chinese officials regarding their recently announced stimulus measures has been seen as a disappointment. As you can see, the Chinese and the Hong Kong stock indexes fell from their intraday highs after the press conference. So how effective are the recently announced monetary and fiscal stimulus measures to pull China from its debt deflation loop? We have with us Morgan Stanley's Asia Pac chief economist, Chetan Iyer. Good morning, Chetan. Thank you very much for joining us. Of course, there is an all-important RBI policy as well tomorrow. But before that, let me start with China. How did you interpret the press conference? Did you get any fresh, insights into the stimulus measures?
Well, Sulata, we were looking out for this announcement from one and only single perspective as to whether they are going to push up their fiscal deficit higher and what is the scale of fiscal expansion. And secondly, is this fiscal expansion going to be targeted towards consumption? Because the need of the hour in China is to lift fiscal deficit and target it towards consumption to address the deflation problem. Having said that, what we heard from the policymakers is that they are going to take up a very small effort towards full announcement today. But the contours were even lower than in terms of the details than what market and we were expecting.
Okay. Can you take us through your understanding of the measures announced before the holiday week? They had announced a fiscal package, and some of the interpretations of that were they were going to give some money to families with 2 or more children, and that they were also going to raise special yuan bonds, and that yuan will be transferred to local governments. Can you interpret the fiscal steps announced so far?
So they announced 3 things on that day. I think in the week of September 22nd. On 23rd, they announced a set of measures, and then there were some more later. But then effectively that was focused on, number 1, to boost the stock market. There was a re-lending program announced by PBOC for that. Number 2 was some support to property sector. And number 3 was to take some real economy measures in form of monetary and fiscal easing. But the fiscal expansion number was not given. They just mentioned that they will take up fiscal expansion as necessary. It was a Reuters news story which was speculating that they will announce a 2 trillion RMB fiscal stimulus targeted towards, in part, for local debt restructuring. And 50% of that 2 trillion was going to go towards consumption stimulus. And so I think it was just that Reuters news story which had raised expectations. And then today, we didn't hear any number in terms of 2 trillion RMB stimulus or even some kind of detail of a big consumption stimulus.
So this is a major disappointment in that case. We suspected even the week before when we were reporting this statements out of China that they were not, official government statements. They seem to be more interpretations. So now would you scale down your China growth, considering that you don't have any confirmation of effective fiscal stimulus?
So we have already cut down our China growth, and we have brought it down to 4.6% versus the government target of 5%. And if there were to be aggressive policy actions taken, we would have had to lift our growth estimates. So as of now, we are going to stay put with our forecast. But just in terms of framework of looking at the China story, Lata, so the way we were thinking about is that considering the fact that they have this deflation problem, unless and until they fix that deflation problem, all the actions taken to support the stock market will not result into a sustainable turnaround of confidence for investors. And I was drawing in from our experience of looking at Japan in the past. So Japan, when it announced first round of ETF purchases for stock market boost, alongside some monetary policy easing measures in December 2010, there was about a 20% rally in topics. But that rally did not sustain because the government did not follow up with action plan that could fix deflation in a systematic manner. So we are operating with that same framework as far as China is concerned, and therefore market is also probably, looking out for this fiscal expansion far more closely, whether they are going to be able to fix that deflation problem.
Okay. Now, I know this is not your area at all. I'm going to ask you a market question. So does your team suspect that the market has overestimated a possible Chinese recovery and, more importantly, a commodities recovery? Now, does it look to you that there will, in fact, be the continued disinflation and the rally in commodities may be questioned?
So, our equity strategy team has put out a note today morning, and they're still maintaining underweight on China. And it's sort of similar to the view that I mentioned earlier that, we will need to see more evidence of fiscal expansion targeted towards consumption for us to change our view that China will be able to get out of this, debt deflation loop, or call it the deflation risks.
Okay, fair point. I wanted to try and get in a couple of statements on India as well. How would you expect the Indian central bank to react? We've had cuts by two big economies, in fact, three: EU, US, and China. Will that have any impact, or is this going to be a no-change policy?
I think this policy definitely is unlikely to be any change because, if you kind of listen to what the governor has been mentioning earlier, he wants to see 4% inflation being achieved on a durable basis. I think we are not there yet. For the month of September, we should see inflation going back up to about 5%. At the same time, if you look at even underlying inflation, we are still around 4.5%. So we're not close to 4%. And at the same time, if you look at credit growth data, it is still relatively healthy. Credit growth is still running above deposit growth. So I think it would be too early for RBI to take up a rate cut in this policy.
Okay, no, fair point. More to the point, tomatoes are selling at 120 rupees a kilo, potatoes at 60 to 70 rupees. We have a very serious vegetables inflation, and I don't think that's lost on the Reserve Bank at all. So food inflation may continue to prevail. A very quick question on the global disinflation that you were the first to write about. Does that continue? Are we going to see this pressure on WPI in India, for instance?
We think that will continue, Lata. To the extent to which China's deflationary situation is not changing, in our view, not changing very quickly. So this will continue in the coming months. At the same time, what seems to have happened is that global goods demand-supply balance has improved now, with supply coming back on stream, and global trade and global goods demand is not that strong. And so I think this disinflationary trend that we are seeing will continue.
Okay. Thank you very much, Chetana, here for giving us your understanding of, how the China steps, what are the China steps and how they may pan out. I think the market is listening very carefully to what Chetana has said. They're seeing a recovery here. Indian stocks lost a lot on the assumption that foreign money is fleeing to China. But clearly after the press conference today, and Chetana here reiterating that his equities team remains underweight on China, we are seeing a return of strength to Indian equities. We actually sign off on Bazaar on a high note. It may probably also be the BJP victory in Haryana. We wrap up on Bazaar on that high note. Chartfasters coming up.